This is the talk of Music City Real Estate.
SuperTalk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
We're back, Carey Ann, and we are looking forward to some more questions today. Remember, everybody, questions at talkmusiccity.com is where you need to send those questions. That's questions at talkmusiccity.com, or if you're a wild and crazy person that likes to hashtag, it's hashtag talkmusiccity.
Yes, it's a new week. It's Sunday, 5 p.m. How are we feeling?
Oh, we're feeling fabulous because tomorrow's Monday and we get to sell another house.
And you know why I'm so happy today?
Why?
It's my daughter's birthday.
It's
a big day for her.
Holy
yes.
Cow. What a wonderful
She
wonderful
is 6 years old today.
Oh, wow.
Yes. She
6 going on 16.
She really is. I know. I swear. She's just the best thing that ever happened to me, you know. She is the mini me.
She really is.
Yeah, people get
You amaze everybody how you can keep a schedule that you do and still be such a focused mama. I'm always blown away by it, Carey Ann.
Well, I am very lucky. Aubrey has an amazing dad who kept us on a schedule for a long time, and now I got that rhythm down, right? Mm-hmm. So she's got really two great parents, and we love birthdays in our house, so we love to celebrate. And so yes, today is her birthday. So happy birthday, sweet girl!
Happy birthday, Aubrey.
Yes. All right. And guess what? Did you have a lot of love in the air last week?
It was Valentine's Day, wasn't it?
Will you be my Valentine there, Monty? I love it. Love was in the air. That's always, right. I love, there you go, right? Uh-huh. I love this month because I can play on the love word a lot for marketing purposes. Sure. I love working with you. I love working with deserving clients. So it's a lot of fun when it comes to the marketing promotions side when we're doing things in February, because there's definitely a lot of love out there for everything that we get to do. And real estate is what we love.
It is, and I'm in love with Realty One Group Music City, but we're going to go down that road again. It's an amazing organization. I'm so grateful to be part of this company. But so, Carey Ann, we have questions. I mean, I'm really blown away at how many questions have come in here over the last few weeks since we've only been doing this for a short time. And I'm so grateful for those folks feeling, it's a little bit of vulnerability probably to share something and put your name on it, but there's some great information that everybody's going to benefit from.
Absolutely. All of our experiences we can share and learn so much and just, gaining wealth through real estate and just understanding the whole process and really feeling educated through it all is so key. And so I love one of these questions here that you're going to be I think we've got 6 we want to talk about.
We've got several here. Let me read this one first if you don't want. It's from Maria in Franklin.
Maria. Thank you, Maria.
She says, "Thank you for answering the listeners' questions on your radio program. Our question is, how can we avoid what our neighbor is going through when we sell our home later this year? They accepted one of several offers on their home about over 3 months ago and still haven't closed on it. She came over last night in tears because it looks like they're going to lose the home they were trying to purchase now since their buyer has not been able to get financing. Her question is, how can a buyer get a loan approval letter and still not actually be approved? This is terrible and something we want to certainly avoid if possible." Wow. I've been there before where the tears are flying. I was on my way to a walk through a new construction not long ago. The folks had decided to go with a large bank, and again, no offense to anybody out there whatsoever, but on the way to the walkthrough, now keep in mind, this bank had this loan package for the length of time that it takes to go from zero, a piece of dirt, to a finished home. Okay. En route, we find out to the walkthrough, which are going to close in less than a week, and find out the people are not qualified to buy the house. Mm-hmm. I mean, talk about often, tears. Sadly. Talk about tears flying. So, can you help Maria here? Help us understand what is the difference. I mean, are there different types of approval letters? This doesn't make sense.
Sure, and I think, are we really looking at a true approval letter? If you see any type of letter, you're going to see a lot of contingencies, right? I mean, it's going to be contingent on so many different things. And so the lender does have a lot of outs when it comes to, the approval letters. There is something called a pre-qualification and also a pre-approval. Right. And so those are two things that are really important, I think, for everybody to understand out there. A pre-qualification is one when you speak to a lender and you share with them that your credit score is a 640. You have a car payment of $350. You have credit cards in so much monthly debt, right? And you talk through that, and your monthly income is blank. And so the lender then pre-qualifies you for a particular house price. And so that's a pre-qualification. A pre-approval is going to go the extra step. They're going to pull the credit. They're going to review your documents. And then an approval is actually when they go this next step and they submit it to an underwriter. So folks, my staff over at CMG Financial, we are not big believers in pre-qualification letters because my name's on the bottom line. Right, and if I believe in being true to my word, I'm going to have to hold up to that letter that I send out. And so all of our pre-approvals are with credit pulled, with income reviewed. And so when you do receive a letter from us, it is a true approval. But understand that when you submit a pay stub in, if the lender doesn't ask all the right questions, there's a lot of things on a pay stub that many doors can open. And it's all about timing. How long were those documents sitting on one's desk before reviewed, right? How long did you actually get to an underwriter? Was the salesperson at the lending organization one that was just a salesperson and not one actually that understood what they were really looking at? So all of that goes into consideration when truly approving somebody. But example, on your pay stub, you may have certain deductions that were never discussed. One that's big that is not discussed is child support, right? And so if we never discuss child support and you pay $500 a month in child support, it doesn't seem like a lot of money, but when it comes to the debt to income ratio, that can swing that approval from approval to denial. And so that's one that is really good to think through. And when we talked about, I think last week, giving the lender all of the information on the upfront. Tell your story, right? Answer those questions fully and completely. It's so important.
Well, especially with somebody with your knowledge base, because the more a story that can be told, the more likelihood that a puzzle piece can be maybe moved a little bit, adjust a little bit to be put in the right spot, I think.
Right. And, the little things that people don't realize is maybe you had a bankruptcy in your past. Maybe you had a foreclosure. But if for some reason it is not listed on your credit report, remember, we talked back a week or so ago that lenders are like detectives. They're going to find out. And so lenders use systems that review all of your past. And so the mystery that I didn't know you had a bankruptcy all of a sudden pops up. Right. And if that processor, if that particular lender took time, didn't do what they were supposed to do on the upfront, and they took the time to get there, they're going to find out that, oh my goodness, we had a bankruptcy now, or a foreclosure now that was not listed on the credit report, for whatever reason. And now I have to follow the guidelines and now you don't qualify. And so that we see that sometimes. And so I'm a big believer in all of the things that could go wrong, you need to do up front. Review the credit reports. Sometimes these credit reports are 25 pages long. You need to sit there and read those because it could be on the 19th page. That could be the concern, right? And so it's really important to kind of walk through and understand everything. Something else that the lenders now go through is if you had a collection pop up between beginning of application and funding, or if you went delinquent on something between application and funding, or if you opened a new credit card or you purchased a new car, all of those things are flagged to the lender. And so we're going to be notified, and sometimes the lender is going to be required to re-pull a credit report right before closing. And what does that sometimes do? My luck of the draw, it never goes up. It always goes down. And so if you don't think 2 steps ahead and pull that credit early enough, especially with new construction, you are going to be in that situation where you thought you were approved and now you're denied. And a little other thing to note is that credit reports are good for, depending on lender, 90 or 120 days. So sometimes when you're building a new construction home, that home takes 180 days or longer, right? And so you need to be able to be prepped, or the lender needs to be thinking about that and not waiting to the last minute to pull credit. I've seen more new construction denials because the credit score dropped right before. You should be pulling it 60 days prior, right? Knowing that you have another 120 days. Buy yourself a little bit of time to make sure that credit score is right where it needs to be so they can maximize it.
You have time to correct it.
Yes.
What do you think are some of the most common mistakes that somebody might make once they've applied and they've, is it buying some furniture? Is it those kind of things? Or what are the most common mistakes that people seem to make?
Well, a few things. I'm at Kohl's and you're going to offer me 50% off or something if I open up a credit card. I like my discount. I want that Kohl's cash, right? And so I open up a credit card. Or my son looks at me and bats his eyes and he needs me to co-sign on a new car for him. And I forget that I'm buying a home and I want to take care of my child, so I help him co-sign for a car. So we see a lot of that. Or we didn't really know and something else happened and you went ahead and maxed out your credit cards. Well, that normally doesn't hurt you, but if something else occurred and you have to re-pull the credit, right, by you maxing out your credit cards, that then forces the score, puts pressure on it and decreases that credit score. So a lot of little things sometimes happen between now and then. But the small collections, remember, when you don't pay a bill so many months back, collections haunt you later in life, right? So it could be 3 months, 6 months when they pop up. Wow. It's not just when it happens, does it make it onto the credit report. And so sometimes it pops up at times that you and I don't want it to pop up, and that's why I'm another big believer in getting closed as quickly as possible so you can, lessen that option with something popping up at the last minute.
Right. That's incredible information. So one of the main things to remember here, guys, is that there's a big difference between a pre-qualification letter and a pre-approval letter.
Yes.
And again, to underline all that, make sure that lender is somebody that is local and that you can trust and that that's got your best interest at heart. And it's not just somebody who got a phone call from some online lender or something like that, because a pre-qualification letter, I've had those set before me to make a decision on to help somebody buy a home, and I've said, this is not worth anything. It's not worth a thing.
Not worth a thing. Do it right on the front end, for sure.
Right.
Hey, so we're going to take a short break. We're going to be right back here on the Talk of Music City Real Estate.
SuperTalk 99.7 WTN, the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
Hey, this is Monte Mohr, owner of Realty One Group Music City.
Hey, and Carey Ann with CMG Financial and my mortgage team. We are back.
Great to see you, Carey Ann. We got some more awesome questions, but before we get into that, I wanted to piggyback on the mortgage talk that you had going on in our last session there. I don't know if you remember this or not, but a couple of years ago, Connie and I decided to sell our home in Franklin and buy an older home and do some remodeling on it. I was confident that I could afford another home. And
like many.
Well, I just was confident that I could buy it, move forward. And so without talking to my favorite mortgage professional and even relying on my own information, instead of doing that, I went out and put a non-refundable $5,000 deposit on a house because I was dealing with an elderly couple. I wanted to make sure they felt comfortable dealing with us and so forth. And I had asked them initially to take their home off the market. They didn't want to do that, so I still kept it non-refundable, knowing that I was able to afford both of them anyhow.
Right. And
then I did a credit report with my favorite lender. Okay. And my information turned out to be bogus because what had happened less than a year prior to that, we had sold one of our last rental properties, and I was selling it to my tenant. And the tenant there was some last minute hiccups with their financing, and so we went past the 15th or 30th, whatever the timing was. And Connie said, "Well, should I make the mortgage payment?" I said, "No, we're gonna close in a few weeks." And
we see that often.
And anybody can see that we paid the loan off. So how could that be held against us when everything else was perfect up to that point, and we literally didn't qualify, or I didn't, until you shared some magic then, and we paid a car off, we did some things, and then suddenly we were able to buy it. But had we just gone to our lender first and gotten that done, we wouldn't have had that hassle.
Sure, yeah. I think the most understanding that the delinquencies that are most recent are going to hurt the most to your credit score, especially when it comes to a mortgage,
Right.
Or an installment, right? And then revolving. And so, yes, in your situation, it just happened. And we see this so often with sellers. They don't want to spend the dollar because it's going to just sell a few weeks later. You know, again, it kind of goes back to that philosophy that you can be late. It's okay to be late. You just cannot be 30 days late, right? And so that anytime it's 30 days past due, it's going to hit your credit report.
Well, I was convinced that I didn't want to chase after that money in case, because we were supposed to close before then. You know, I didn't want to chase after that, so I thought, well, not a big deal, but it is a big deal.
It is a big deal. It is a big deal. But the good news with the story is we were able to do some things that we talked about, I think, in a previous show about how you can boost your credit by making sure and maintaining and doing a few things. So
I hope everybody's paying attention, because it's amazing how things can happen. You know, you don't think you're going to buy a house, or you don't think you need the credit. You know, you don't see anything on the horizon. Then life happens. Then all of a sudden, oh man, I wish I hadn't done that.
Right. Yeah, absolutely.
We weren't planning on, when we paid off that or sold that rental property, we weren't planning on moving. We're going to be there forever.
I see more recent delinquencies on just so small retail accounts. I can't stress that, right? Where the $10 minimum payment, $35 minimum payment, $50 minimum payment, and they're delinquent past 30 days. And you and I know it's not because they couldn't afford the $10, $35, $50. It's just because they got lost in the shuffle of life and didn't do that. Now, the other thing is, well, my bank was supposed to pay it. It was online. You know, it was an auto draft and things like that. And so you want to always double check. You know, don't assume technology is always going to be your friend. Right? I mean, it's a great tool, but we can't rely on it to be accurate all the time. So double checking that your bills are paid, you know, on time is important. And then if you find that you're not, you know, you can cry. I've been there once before where I had to call up, you know, that creditor and really plead my case, where I've never been delinquent ever. And this one delinquency could hurt my credit score in such a way that would be devastating. And so we worked something out where I was able to remove the delinquency with an error letter. And so there's ways to work through that. So if you have a delinquency that you really had a situation due to a family emergency or something, call your creditor that you've had a really good relationship with for so long. They probably will make an exception for you, or maybe work it out with you.
It's all about communication there, though.
Yeah, that's key. And timing, right? You can't do that a year later, right? You need to, you know, be on point and do that as quickly as possible.
So we're living in this transparent world. We have credit reporting. Credit score can't be overestimated. It can't be overstated, the value of that.
Right. No. And you can, for those that do not have credit scores out there, you still can purchase a home. If you're a first time home buyer, if you have no credit scores, we do want to make sure that you're comfortable and understand the importance of credit. And so they're usually going to ask you to show 3 alternate trade lines that you've paid satisfactory for a period of time. That could be a rent payment, car insurance, cell phone, things like that. But folks that are just starting out, and thinking back, I wish I started out sooner than I did. I think you can gain a lot of wealth through real estate. And so don't be afraid if you don't have any credit. If you have been a great renter for so long and you make satisfactory payments and you know your car insurance is paid satisfactory and your car insurance is on time, you know, you could possibly still get a home loan with something called a no score credit, you know, but credit scores run usually low 4s to high 800s. And so you're going to see a different spectrum there, right? And so lenders look, depending upon the type of program that you're interested in. If it's a government loan, they go down usually close to a 580, depending upon the lender. And then Fannie and Freddie, which are your conventional agencies, those are going to look for the low score of a 620. But understand that your interest rates are based upon the credit score. So the higher the credit score, the better the interest rate and everything else that comes with it.
And what is the variation there? I mean, if the rate we're not making any statements or a rate, but if the rate was at, let's say, 4 3/4, the going rate, the most competitive rate, what would be the difference? Is it a quarter of a point, eighth of a point, half of a point?
Great question. I think you can talk in, I mean, it could be a sway of 0.5% all the way up to a whole percentage point.
That much difference?
Yeah, there's a lot that goes into, and that's another whole topic. What goes into an interest rate? You know, why is this rate different than that rate? Why does this lender have this rate versus that type of thing? There's a lot that goes into it, but there's many factors. Just one piece of that is your credit score, and so just understand understand, I think we talked about it in a previous show, there's different levels. So 580, 600, 620, 640, 680, 700, 720, 740 is kind of the rhythm that we work with. And those are thresholds. So as you break through that threshold, you're going to see a different interest rate, hopefully improved. And B, if you have not put 20% down, your mortgage insurance is required. And we'll talk about that on a different show. What is mortgage insurance? But that factor for the mortgage insurance can also decrease, which in essence lowers that monthly mortgage payment, right? And that's what we're all aiming for, is why pay more if we don't have to.
So is there some sort of static relationship to, okay, if I pay a car off, it's worth that much towards my credit score, or anything like? Is there any sort of consistency there, or you just throw some things in and hope for the best? And
I think there is it's not 2 + 2 is 4. But there's not a specific formula. It's just a healthy balance of everything and making sure when I'm talking to customers, I say, think of it as a big pie and there's different pie pieces, right? We need 3 pieces of pie that go towards this part of credit, 2 pieces of pie for that type of thing. And so it's just not accurate. And sometimes what's so frustrating is, let's just say that you are one that had a no score and you finally jump on as an authorized user to your mom or dad or your significant other, and you have 1 card. And so now all of a sudden you have 800 credit scores.
Wow.
Well, you just only have that because you haven't had enough credit, right? Okay. And so the lenders think through that. That does not mean because you have an 800 credit score and 1 account that's an authorized user on your mom's account does not mean that the lender is going to say you're comfortable to be able to purchase a home. They're going to want to ask more questions. They're going to want to see if you have a good rental history. Do you have any alternate credit that you can provide to show proof that you understand the importance of making your payments every time? And that's the big thing with lenders. They're looking out, do you meet the guidelines, and what is your ability to repay that mortgage?
Gotcha. So if somebody is working they're on their credit with some of these tricks that you've shared or these things, how long does it take? Does it take 30 days, 60 days? What's typical there?
Yeah, that's a great question. If you are one that has no scores, if you reestablish yourself, it does take 6 months to get a credit score. Okay. If you're one that already has credit scores, you can make a flip to your score through rapid rescore processes, which some lenders do have, and that can be as quickly as 7 days. But understand that the reporting reports every 30 days. So your score could shift after 30 days.
Great information.
Good stuff here on the SuperTalk 99.7, the talk of Music City real estate. We're going to be back. We're going to take a short break. Excited to talk more with you.
SuperTalk 99.7 WTN, the talk of Music City real estate,
where we educate and motivate all things real estate.
We're back, Carey Ann. We want to remind everybody to send in their questions at talkmusiccity.com. That's questions@talkmusiccity.com or hashtag #TalkMusicCity.
Yes, we've got a great question here from Eddie from Madison. So this question, it says, our agent says that it is a good idea to get a home inspection before we list our home. What is your opinion on that? I hate to spend $400 if we really don't have to.
Well, most of the time I'm probably with Eddie on the topic because, here's the reality that, if you bring in 3 inspectors, you're going to find 3 different results a lot of times. Okay. Just because it's again done by human beings with their checklists and so forth. And some I've found over the years that if somebody came from an electrical background, they're going to be harder on the electrical part. If they come from a structural background, before they did inspections, they're going to be more difficult on that part of it. But here's a caveat to that, because over the years I've really typically discouraged people from investing that money, just knowing that, the new buyer is going to do a home inspection anyhow. It's not like you're going to save a step there.
Right.
But on occasion, like a few weeks ago, I sold a house I listed a home over in Bellevue that the folks had lived there for 20 years, okay? And they bought it new. And so nobody had inspected that home for 20 years. A lot of things can happen.
Yeah.
Okay, especially if a home has a crawl space under it. You never know what might be going on underneath that home, which is a big deal. So in that case, we did contact our home inspector, Anthony Clemens, and had him come over and do what we call a kind of more of a cursory inspection rather than a fine detailed one.
Okay.
So he's flexible in how he approaches that. But we were able to get rid of any big concerns. Okay, there was not going to be surprises.
Major.
That's the value of having somebody come through. You don't have to worry about, holy cow, you've got a big sinkhole and you're underneath your house or something crazy, going on under there. Because
save the surprises.
Yeah, save the surprises. Plus, they can look around to see if there's any termite concerns or that kind of stuff underneath the house. That's the biggest thing. If there's any settling going on, those kind of things. So yes, most of the time I'm saying, don't waste the money, especially if you only owned the home a couple of years and you've had the home inspected when you bought it.
Sure.
I don't recommend buying a home without an inspection.
Right, it's important. Mm-hmm.
That's really important. Even today, I did a walkthrough on a brand new home, an expensive one, and my client really wasn't planning on doing a home inspection. And I said, look, here's how I would approach this topic. There's 3 basic ways you can look at this. But first of all, understand this, that your home was built. I don't care how nice it is. I don't care what kind of reputation the builder has. It's built by people. And people can make mistakes. They can be looking the wrong way. They're a group of vendors that are supposed to be working together, but to be honest with you, they don't always. Okay, and so my recommendation to him was, okay, either do this: either get a home inspection prior to closing, get an inspection prior to your 12th month, your 11th month of owning it, because there's a 1-year warranty that all new construction has to provide. Or even better yet, get one on both ends. It's especially important, I think, to get one on the front end because you're never going to be any more important to that builder than you are right now.
True.
It's just human nature. Once the closing takes place, the money's taken, changed hands.
Sure, yeah.
And they'll certainly not want to not make you happy, but their desire might be affected by that status, okay? The other part, again, is to do it. The benefit of doing one right before the end of that 12-month period is now it's like a demo car. You've had it out on the road for a while. The weather has come in, or has hit it for 10, 11, 12 months, and now you can see, is it weatherworthy and has anything happened that wasn't supposed to?
Yeah, so for all those folks that are learning more about, inspections, are there multiple different kinds of inspections?
There are. There's, the main one that we're talking about right now is that complete home inspection where they go from the top to the bottom and making sure there's no surprises there. There's other types. There's radon inspection, for instance. When we bought our home, the last one we had 2 years ago, the owner said they had just had a radon inspection done, and it was fine, so we didn't bother to get one.
Okay.
Then when we sold it a year later, the new buyer got a radon,
sure.
And guess what? We've got radon,
right.
And it was at a high level. And so I went to the radon company and said, "Well, how can this be?" Because I believed the other folks, and I don't think they would have lied to me. But that's the risk you take in that scenario. But anyway, so we had dug some ground out from our crawl space to make some more storage. Oh. And the radon company said, when you disturb the ground like that,
sure,
you can cause that radon. That radon's a gas. It can come up and I had somebody with a jackhammer down there to kind of cutting out some dirt, so we had more storage underneath the house. So anyhow, that can be that part of it. Another one is termites. I want to encourage every seller, before you sell your home, take a quick walk around the house, make sure that you don't see any old lumber underneath the house or underneath the deck, that kind of stuff. Because if there's one little termite trail across that piece of scrap lumber, guess what? You're going to have to provide a termite treatment to that home.
Oh, wow.
And that's a whole other topic that we can get into sometime, but I'd rather always be on the proactive side of those termite reports, because I swear I've had cases where I swear they brought their own termites. Most of the termite companies are absolutely trustworthy out there. There was one out there, I don't know. I really don't know, because anyway, I won't go down that road.
Well, when we were talking about termite letters, so depending upon the type of program, you may or may not need a termite letter from the lending standpoint, but it is always good to make sure, that you are covered from a termite standpoint. What about chimneys?
Chimney's another one. We didn't get a chimney inspected, and I wish we had, because our chimney was having some serious problems. That cost a couple $1,000s. So yeah, it's never a bad idea. What a good inspector will typically do is if he's not certain about a roof or a chimney or whatever, is defer his opinion to that expert in that arena. That's all they do.
That makes sense.
Yeah.
And also, you could get a pool inspection.
Absolutely,
right? If you have that,
pool inspection. I would always recommend, and some inspectors bring an HVAC person in. An HVAC a system can, if it's over 6, 7, 8 years old. If it's a gas system, it could have this situation with a heat exchanger as an example. That's sometimes you can't tell. My point is, if you know that the home you're buying, if you know that it's got a system, then it's at least 6 to 8 years old. Go ahead and include that HVAC system inspection during your other inspection as well when you're buying that house.
Right, that's a good one. All inspections are key. One that concerned me after purchase, and I never thought about it, but is there a window inspection? Because it seems so foolish, but I found out after purchasing the house, after so many months, that the windows were warping on the front of the house because the builder painted the color of, they weren't supposed to paint those windows, and because they painted them dark to match, to look really pretty, the sun hits the front of my house. So every window in the front warped, and now I have leaking of, warm air or cold air, all that stuff, right? And so it's a $50,000, expense. I'm going with holes right now in because I'm not going to deal with that, nor do I have the money to take care of that.
Duct tape works.
Yeah, I mean, I'm finding ways to stuff in areas, but would you ever imagine your windows warping?
I wouldn't have.
There's a term, that I'm learning. I don't know it off the top of my head right now, but checking your windows, because then guess what? They're under warranty, they say. Well, they are if you don't paint them.
Holy cow. And it's too late to connect that back to the builder who built the home. Correct,
right. Wow. And so the windows look great from the outside, not so much from the inside, So things like that you would just never know unless you start to, hear good information on the talk of Music City Real Estate.
Yes, exactly. A lot of times window problems, do come up in a regular home inspection when they lost their argon gas inside, that they'll look a foggy look to it. But I haven't heard about the warping window, so that's not a common thing, and that might be a tough one to actually visually see unless you were in a hard wind coming against the house, and they've got tools that can check the temperature differential between the glass and the.
But if you can't lift it because it's warped, that would be your clue. I would think, right?
Yeah, that should have been checked.
Right, and then you're going to sue the inspection company. I mean, there was a lot of things, and so. A lot of lessons we go through by, purchasing and selling real estate, and so, but I will say getting true inspections on the upfront is definitely really, really important. And there's so many amazing inspectors out there in Tennessee for sure.
There absolutely are. So our, let's see, another question here. I'm so blessed by seeing all these questions here.
Yeah.
Today. Another one similar to that right before here was, should we get an appraisal on our property?
Prior to you listing?
We're about to put our home on the market, but are wondering if we should get an appraisal first. We've lived here for almost 20 years and have no idea on what the place might be worth. It's never a bad idea. My answer to that would be it's never a bad idea to get an appraisal when you're about to put your home on the market. We as professional realtors, we have the same information, but if we're, not certain, it's probably worth the $400 to do that. What are your thoughts?
Well, we had one done. The seller had one done on when looking at the property that I purchased, and the new appraisal didn't come in at the same appraisal amount. So at the end of the day, an appraisal is an opinion of the appraiser. And so that's really important just to know. But I do think if you are wanting to feel good about the property price that you are listing at, I think getting an appraisal done is important. Especially sometimes if you're looking at new construction and you gave builder deposits for upgrades on your home, remember, it's not dollar for dollar, right? You're going to, maybe having to bring extra money to the table, because if it doesn't appraise, you have to bring the difference, and you have to still put down the same the same down payment. So it is important to know exactly, what your appraisal amount could be.
That $20,000 of upgrades did not equate in $20,000 of
no, and I see that a lot with new construction. At the end of the day, the value, of the home is only this, so they have to bring more money to the table because the house just didn't appraise.
I think the main thing to remember here is that even if you get an appraisal, that does not mean that that's what the consumer is willing to pay.
Correct.
Nor is that the number that's necessarily going to happen, because you've got a conventional appraisal and you just got a FHA buyer,
right.
VA buyer. Those
and know that appraisal is only good for so many months. You can't have it follow you for years, right? And again, it is just an opinion of an individual. So it could be different when the next person goes out there and appraises the property.
Good point. Good information.
Yes, absolutely. You're listening to the Talk of Music City Real Estate. And when we come back, we're going to be talking about crowdfunding your down payment.
Is that a real thing?
It is.
Wow. SuperTalk 99.7 WTN, the Talk of Music City Real Estate,
where we educate and motivate all things real estate.
Remember, get your questions to questions at talkmusiccity.com, and everybody be sure to go to our Facebook page, the Talk of Music City Real Estate, and the podcast there. You get to watch us in live and in person. I thought when we were going to do this that we were just going to be just radio only, and here we are, the video part too, Carey. And what do you think about that?
Well, it makes it a little nervous. How many times do I, move my jewelry here, right? Hey, so we got to get started because we have something really fun to talk about on our last segment.
I love this question.
Yes,
I really love it, and it comes from one of your fans. I wish this person. I'm assuming it's a woman. It may not be. They've signed it, a fan in Franklin. So I love this. So anyway, Carey Ann, you are such an inspiration to all that know you. As a real estate professional myself, I have witnessed firsthand how you have gotten loans approved when other lenders have failed to do so. What I want to ask you to do today is simply, can you share with us, to the listeners, about your Home Fund It program? I think it is a wonderful option, especially for first-time buyers. Tell us about this.
Home Fund It. Yes. Home Fund It is a very innovative, creative program only exclusive to CMG Financial. So this is a big thing for CMG Financial. Our owner created this program to help gain home ownership for many more families. And what's great about this program is that the buyer out there can crowdfund their down payment.
Wow.
It is the new way of getting mortgage financing, right? And so those that are familiar with maybe other companies out there where you could crowdfund funds for maybe a certain cause or a certain medical bill, etc. It's very similar. We set you up with a profile. You share your story. There's no transaction fees, and you get to share your profile to all of your family, your friends.
The full amount goes to the couple or the person?
Yes. There's no transaction fees. So it goes to your family, your friends. You can send it out to all of your church members, or maybe your sorority sisters, your fraternity brothers. This is a program that allows you to really gain that down payment money, and not stress so many people out from a large gift standpoint. So it could be as low as $10 or as high as $7,500 without any documentation required. And so we can get further into all of that later on what is required for a gift. But if you're someone that is just starting out, it is hard to ask maybe mom or dad for a large sum of money. But this program allows you to connect with all your family or friends who want to see you maybe purchase your first home.
So a young couple about to get married, instead of having people buying them Tupperware, they could actually give to this? Is that
yes, I love this program. I have gone to many bridal shows. I wear my pink and go to the bridal shows. Why register at a department store when you can register at Home Fund It, right? And it is one that allows you to get maybe the gift that they will provide you at your wedding. And I think they say the average wedding gift is maybe $150. And let's say you have 50 to 100 people come to to your wedding, right? That's going to be enough money, or at least the beginning of a down payment for a new home. And so there are some parameters and some guidelines and some specifics that we have to follow when it comes to that. But this program is definitely helping so many more families gain homeownership. You know, some folks do not qualify for the grant programs that are out there.
Right.
You know, some folks do not have savings at this time,
right.
you know, but they really want to take the time and save their money, and crowdfunding is the way to do that. It's the new way of, you know, gaining homeownership.
And the full amount that Uncle Sam gives into this crowdfund, you know, $5,000, that's not $5,000 minus some sort of fee, like
no, it's 100%. It goes straight to the buyer. So the neat thing about this program is when the donor jumps on to their profile, they can click that this is contingent on them purchasing a home, or not contingent on purchasing a home. So they will raise the money up to 12 months if needed, and after 12 months, if the person decides that they aren't ready to purchase, or they're not at a place that they can purchase, depending upon if it was contingent on the home, the money goes back to the donor. And if not, the money goes back to the actual recipient of that. And so home funded is what it is called. So for everybody that is out there that wants to know more about the program and maybe even get started, there's no cost associated with it. It's an exclusive program just for CMG Financial.
Wow.
And it is the only crowdfunding platform available out there that allows you to purchase a new home utilizing gift funds through this crowdfunding platform.
I love this idea. This is incredible. No wonder this agent friend of yours wanted to talk about this while you're
Yes. And, you know, for those folks that are out there, we have a new website that you can go get all of the information about Home Funded. It's called fundittalkmusiccity.com. Fundittalkmusiccity.com. That's a great place where you can get started. You can talk through it with maybe your mother or your father, or if you're one that is just about to get married or plans to get married down the road, this is a great registry. We do a lot with this with new engaged couples. It's a huge win.
I can imagine something like this available and everybody not take advantage of it. That's amazing.
It is. I think we've hit over $1 million of crowdfunding within this program.
Holy cow.
And so it is one it is real. Yes. And it is helping families that were not once approved be able to. And there's some amazing stories on the website that you'll go to and just hear, you know, that without this help and assistance from all their family and friends, they definitely would not have been able to purchase. So it really is just it's a great program.
Really bless your heart to even be involved with having a choice like this for
Yes, I love CMG Financial and their innovative ways to really make a difference out there in the community and just really do good. And Home Funded is one of those. Now, I've got something big to tell you. We just added something on top of Home Funded. Guess what it's called?
Do we need some drum roll in the background?
I know we do. It's a big deal. It's a big deal. Hey, so we have added our Up It program. So all of those folks that are your family and friends, now their online shopping habits can go towards, portion of their online shopping habits can go towards their down payment as well. How about that?
You're kidding.
No. So if you are one that shops at certain organizations, we have teamed up now with over 300 companies that are giving portions of the of their spending to this 503c. And all of that money then goes towards your particular profile. And so they connect online that they are helping support borrower A, and all of those funds or contributes go towards that. So that's another avenue.
Home Funded, or this something separate?
Right. It's a separate, but it is connected. It's a complement of. Okay. And so Up It allows still more funds to go towards the down payment. So the combination of Home Funded with Up It allows people to get into a house very quickly, you know, and keep in mind, it doesn't have to go just to down payment. It can go towards your closing costs as well. So similar to maybe companies like Ebates, or when I go to the grocery store, they ask me what school does Aubrey go to, and I reference a school. A portion of the food that I buy or the spending in that particular grocery store goes to her school. Very similar. So they've taken the time to connect with so many organizations, so many companies out there. Portion of their online spending habits then go to the particular profile or the particular person.
Man, that's incredible.
Good stuff.
That's incredible.
So if you're really interested about this program, make sure to check out fundittalkmusiccity.com. Again, fundittalkmusiccity.com. If you're an agent out there and want to know more, this is a place to really create a lot of curiosity and buzz out there and work towards helping many more families. The other thing, if it's not weddings, it's graduation parties, right? Or college graduation parties. You know, teach people early to gain wealth through real estate. That's what we're all about, right?
Wow, this is really backing it up. That's really walking the talk.
Yes.
To have something like this available.
It is. It is good. It's good stuff. I love when I get to talk about it because it's one that really just makes a difference and can help so many, for sure.
Well, Carey Ann, thank you so much for sharing about that. I'm excited about reminding our company of this service. I didn't know about this, the additional part to it. What was that called again?
It's called Up It.
Up It. Up It. So fund it and up it, huh?
Home fund it. And up it. Yes.
Okay. Wow, this is mind-blowing. It's really been some great information shared today. Thank you so much for the privilege of sitting here next to you in this environment of sharing this wealth of knowledge and information to the folks out there that are listening. And we want to again remind everybody, please send your questions to questions@talkmusiccity.com. Please be sure to go to our Facebook page, The Talk of Music City Real Estate, our podcast there. You'll get to see us live and not live, but in person for sure.
Yeah, you definitely could see us, moving and shaking back here behind the mic. I love it. And if you have any topic suggestion, don't hesitate to reference that as well. We would love to help move in the direction. We have so many great topics we're going to be talking about here on The Talk of Music City Real Estate. We thank you so much for tuning in and listening to us. We look forward to seeing you next Sunday at 5 p.m. on The Talk of Music City Real Estate.